Hi, everybody. Good evening. Hope you can hear me okay. Let me know in the questions box if you can hear me all right here. All right, let's get started, folks. Let's get started. Yeah, I just want to make sure everything is running okay here. The reason I say that is because I'm actually broadcasting from we're away for a few days in Florida, and I want to make sure I'm using a laptop. So no music. You didn't hear any music? Okay, well, oh, okay. No music. Let me see what happens here. Why we didn't get music? Okay, we're going to have to figure that one out. I think you have to pull a button here. For some reason, it's not. Hmm. Not sure. Okay, there it is. Share sound. Thank you for telling me that. I get the share sound now. Okay. Uh, okay. How does it look now? Okay. Can you hear me all right? Can you hear me okay? Let me know if you can hear me. Okay. All right. Okay, 5 by 5. Yes, missing music. Thanks for that, Tom. Yeah, you know what? I'm really sorry about the music. Geez, I had some really good music too. Okay, so and looking good. All right. So as I mentioned here, we are actually out of our home base. So sometimes things get a little iffy at that time, right? I'm using a laptop, and I'm not familiar with this laptop, but I think I got it set up pretty good. So hopefully it'll work all right. And I want to get moving here. I'm trying to use two little screens here that I'm not used to, but I think if I click this, there we go. That one worked. Okay. Pardon me as we work through this the technical issues here. All right. It looks like tonight we're going solo, folks. Today is let me get the recording here. Okay. Okay. Good evening, everybody. Again, welcome to DayTradeSPY.com's weekly fireside chat. Normally it's a beachside chat, but today we're back to the fireside chat because that is the PowerPoint that we have. All right. Anyway, it is Sunday, June the 30th. This is the last fireside chat of the first half of the year. And we're flipping over to every day, rather every week. We're going to have our beachside chats. Anyway, this is the introduction to Trading Week-In Review. All right, and we're going to get started here, and let's get started. My name is Hugh, and excuse me. Normally we have Aaron along with us as well. Aaron Stevens, he's my partner in crime, but looks like he is off today. So we'll hear from him tomorrow morning as we do the trading room. Okay. A couple things I want to mention to you folks. There's the questions box. You'll find a little questions box icon on your Zoom dashboard. Click on that. I am the only one that sees that. And go ahead and say whatever you want. By the way, yes, there's a questions box right there. And any questions at all, let me know. We'll certainly endeavor to answer them. I'm not sure we're going to get to them all. I don't want to keep you, sort of all night or anything like that. I know sometimes you get into these webinars, and I've been on webinars where they went for hours and hours and hours. I swear the people were just kind of seeing who's going to give up first, the presenter or them. And you go for dinner, you come back, and it's still going. And that's when you get into the questions segment here. But I'm not here to keep you all night. So hopefully an hour and 50 minutes tops. Maybe not even that long. We'll see. We'll see how it goes. All right. So if you are new here, please let me know in the questions box that you are new. Give me your history with the options, whether you are familiar with options or not, or whether you're familiar with SPY options, and perhaps whether you're familiar with day trade SPY or not. I know looking at the attendees list here that I've got up on my screen, I know some of you people have been with us a very, very long time. And a big shout out to you guys and gals. So nice to see, Charles G and Dave, Butch of Davids, and my gosh, there's a lot of people that I've talked to for years, and almost seems like old friends, but Jimmy S. Oh my gosh, there's just a lot of names here that are familiar. Anyway, if you are new again with DayTradeSPY or new to options, let me know maybe your history with options. Let me know how you're making out, if you're making any money, or you're obviously here for to learn how to do better, right? I think that's kind of the idea. So a lot of people online, so hopefully you get to some of your comments, questions here. Okay. Da-da-da. Okay. All right. Change to the B side. Jason, I will, as soon as I get back to my regular computer. We're going to be gone here for, actually, we are going to be gone here in a few days. Actually came down here a couple days ago. What was it yesterday? Yesterday, I think I flew down here. My wife is down here in Orlando area and touring around schools. I don't know whether some of you know this, but we help out some kids at the university, and we were coming down to check out some schools. And yesterday we did, I guess, what did we do? 3 or 4 schools yesterday. Stetson was the first one, and then we went to Florida Atlantic University, FAU, and then we popped over to Florida International University, FIU. And then I said to my wife, when are we going to go see Florida University? And she says, Hugh, there is no Florida University for obvious reasons. You said there's FIU and FAU. I'm not going to tell you why there is no Florida University. Uh, it's not going to sound very good if I tell you what that short form would be. So, all right. Thank you for that, Phil. Phil L. Yeah, the short form for Florida University would be you can use your imagination. All right, let's get going here. Questions box, moving along. If you are new here, as I mentioned, let us know in the questions box. Big shout out to you. Meanwhile, I'm going to give you a couple of seconds here to read this disclaimer. This keeps the lawyers busy. They have to eat too, I guess, from what they tell me. So I will be quiet for the next 20 seconds. All right. Past performance does not guarantee future results. You alone are responsible for all your own trading. Charts are courtesy of Schwab, Thinkorswim, and Tasty Trade. All right, now meet your hosts. Here it is, me live, living color, as good as the color gets on this laptop. In a beautiful Florida. So we had some rain here earlier. It's funny, a couple hours ago, it was raining like crazy. I love Florida weather because if you don't like it, just wait a little bit, a few minutes, it clears right up, or it gets worse, nasty. And then coming from Western New York, we have some pretty warm temperatures here right now as well. But I've always loved the Florida weather. There's just something about it. Anyway, it even smells better. Anyway, folks, my name is Hugh. All right, you probably gathered that. And let me see if I can get there's Aaron. He is my cohort. There's just a picture of Aaron. Excuse me. I don't have him in live color. Excuse me. I got sore throat here. I believe if Aaron joins us a little bit later on, I'll be able to bring him in, and we'll certainly chat with him. But so my experience comes from mostly in the trenches, in the hard rocks. I like to call it the hard rocks. Most of what I learned from trading was from hardcore experience. I mean, let's face it. We took a lot of courses. I come from a corporate background, corporate America background, and only when my own financial advisor lost about half my equity did I realize I have to learn how to do this myself. And I figured out a few things that worked really well for me. And those, fundamentally speaking, those short-term breakout moves for small daily gains, do them multiple times a day, that generally works well for me. And those, I guess you can call them singles and doubles, right? You hit singles and doubles, that's really what wins this game long term. Now, those home runs are wonderful to get and they're great to get, and more power to you if you can get those. But if you're shooting for the fences every time, what do they say? Some of the greatest baseball players also hold the record for having the most strikeouts, right? So that's kind of my thing here. And I've looked, I've looked at a lot of different strategies. I started with equities. I looked at futures, options, commodity. I looked at forex. I didn't touch crypto. I stay away from crypto. Nothing to do with crypto. Uh, but I kept coming back to this thing called options. I just seemed to really understand them. They just struck home with me. I thought, this is interesting. And there's one thing about options that really sunk in with me. And that was what somebody said that, yeah, most, probably 95, 98% of options traders lose their money. I thought, well, that's really interesting because if I could just be a little bit better than them, that means I'm going to make money. And if they're going to lose their money, they might as well lose it to me. That was kind of my morbid, twisted reasoning. And I realized there's a lot of mystery to options out there. A lot of people don't know what options are, or they think there's some magic behind these things, and they're actually not. They're simply contracts that enable the options holder to trade an underlying stock for a certain price by a certain date. And anyway, without getting into too much of that, I think most of you are familiar with options. I started trading options and started trading different companies, and I kept honing my skills, getting more and more laser focused to the point where ultimately I only trade options on SPY, which is the stock that follows the top 500 stocks, the S&P 500. And it's amazing that when you actually master this, just how lucrative this business can be of trading SPY options. I don't do anything else. And I don't do this on the side. Some people think, oh, yeah, you're a trader on the side. What do you do for a real? What are you, a truck driver? Or you're this or that? No, this is all I do. I've been doing this for a long time. And obviously, I don't work for corporate America. I guess that's not really true. A couple of years ago, I guess it would have been a year and a half ago, Eagle Financial Products bought us out, Salem Media Group, and then they hired us back. So I'm back working for corporate America, but I love it. Anyway, that's my story. And I use, I use fundamentals and technicals. I look at market sentiment, and I determine with a great accuracy as to which way I predict the markets are going to go today. I'm not that smart to determine where they're going to go a year from now, or a month from now, or 6 months from now, or even a week from now. But I got a pretty good idea where the markets are going to go today. And that's what we actually release to you in our various predictions. So with that said, we get in and out, get in and out, get in and out, make a few bucks, do it all again tomorrow, the next day, the next day. And I can honestly tell you that as long as I've been doing this, I've been teaching people now publicly for 15 years, which is a long time in this industry. Believe me, most traders don't last that long. Excuse me. And I've been trading before that on my own, but I am just as excited to come to work, if you want to call it that, every morning now as I ever was. I mean, it's unbelievable when you beat the S&P 500. It's just such a good feeling. I know it's kind of weird, but anyway. Now, Aaron, on the other hand, is pretty cool because we picked up Aaron from he used to work for a commodity firm, trading firm. In fact, he was the technical analyst for a $150 million commodity firm. But Aaron gets his education similarly to mine. He'd been studying technical indicators and trends and that sort of thing since high school. He'd be down in the library, and all the other kids are out there, playing sports or running around and chasing girls and stuff. Aaron's in the library like a nerd, he'll be the first to tell you, charting. He'd be charting companies and different things. Great guy. And he identifies these high probability trades using his own unique set of indicators, completely separate from my set of indicators. Now, I like to keep it simple. That's kind of my objective. Markets go up and they go down, and SPY follows the top 500 stocks. So basically, we just have to look and see where's the economy going, and we can generally follow the stock market. Sorry, I got a raspy throat here tonight. Just follow the stock market with where the economy is going, And so I have my set of simpler indicators. Aaron has his set of, I would say, more complex indicators. Now, we have this thing that we call, it's a saying that when our indicators unite, our trades ignite. In other words, if Aaron says the market's going to go up and I say completely independently the market's going to go up, you might want to buy some call options because that's the way the markets are probably going to go up. You'll probably be pretty safe with call options, right? And Aaron and I, between the two of us, we have over 40 years of market experience, and I think that's pretty good. That's pretty good. So, all right. Moving along, I just want to mention a couple of announcements, quick announcements here. First one is the other day, last Wednesday, we held an online workshop. This was the bread and butter strategy workshop. Now, this is a little strategy. So it's actually the essence of what I do. Everything I do centers around this sort of this bread and butter setup. And this is what we had a webinar on. It was a workshop, a live workshop last Wednesday. And we're on for about, I would say, an hour and 3/4. It was recorded. And this is where we discussed that very essence of everything we do. All of our strategies sort of center around this bread and butter strategy. Now, you can make money just trading the bread and butter strategy, or you can use some of our other strategies, for example, scalping, and make much more. You can follow this up with longer term, when I say long term, I'm saying, sort of to the end of the day type of thing, strategies, and it works very well. I'm going to take a break for about 10 seconds. I just want to turn the air conditioner off in here, folks. Just don't go anywhere. I'll be right back. Okay, sorry, my wife likes to really get a cold, in here, and meanwhile I'm kind of freezing. So she's always hot and I'm always cold, and you can imagine the jokes behind that one. So anyway, the online workshop, the bread and butter strategy workshop, is now posted on our website, DayTradeSPY, and you can get to that by going to the website, DayTradeSPY, and up in the top right corner, click on online workshops and purchase it for only $249. Now, I want to tell you something very, very sincerely here when I say this. Knowing what I know, and I sure wish I had this when I was learning this stuff, I would gladly pay 10 times the money that they're charging for this. I would gladly pay $2,500 in a heartbeat for this particular workshop. As a matter of fact, during the live training session, we actually executed a trade, and I showed everybody exactly how to do it. Anybody who followed along made money on it. So it worked out very well. All right, so that's one announcement. We have another announcement here. Okay. It is our newsletter, our weekly newsletter that I write here. It's called Spy on the Market. And this is a newsletter that goes out every week, free, every Thursday. It's a brief 3-minute read, perhaps, light, relevant, entertaining as well. All you have to do is subscribe, go to DayTradeSPY.com. And when the pop-up comes up, just leave us your email address and it puts you on the list. This is what that pop-up looks like here. I should tell you, this week's topic is going to be why our trading room is special. Why our trading room is special. Why our trading room is special. This is what that pop-up looks like here, okay? Excuse me, you'll see right here, just leave us your email address, get this free report, Day Trade Spy's tips, tricks, and traps from the trenches. You can learn some tips, tricks, and traps, and it's actually pretty cool, and it'll also put you on the list for the Spy on the Market. All right, tonight's agenda. Okay, gonna review last week, preview of next week, give you a little 2-minute tutorial, do some Q&A, how we can help you, and it's gonna do an options primer. That is going to depend on whether or not we have a lot of people who are new to options, and if we get a lot of people who are new to options, don't know what they are, then we will do an options primer. Otherwise, I'll let you go early. All right, so. That's the plan for tonight. Okay, so moving along, moving along. Okay. Okay, week in review. Okay, why does this not want to advance? There it is right there. I think it's click on the wrong thing here. Next animation. This is what our week looked like. Each of these candlesticks represents 1 hour of time. All right, the green tells us the market is going up. The red is telling us the market is going down. Now, last Monday, it was a low, no news day. Not too much happened. SPY hung around this 545 and a half, 545, 546 range for much of the morning here. It bounced within a 5-point range, as a matter of fact, before it dropped, and it closed at Friday support on technical trading. So not much happened. SPY does like to go up. If you leave it alone, and if there's no catalyst to move it down, this market SPY likes to gravitate to the upside, and that it did. And then hit a resistance level on a technical indicator, probably some Fibonacci retracement. I don't know what that number was right now offhand, probably a 50%, somewhere around that 546, 20, 30 level, whatever. And the sellers came in and motivated other sellers. And then the stock dropped to the close on, actually it closed at a support level from Friday. That's what happened last Monday. And I'm trying not to spend a lot of time on the history because it's not so much what happened in the past that's important as much as what's going on in the future. On Tuesday, we had the Richmond Manufacturing Index and the Conference Board Consumer Confidence Report came in better than expected for the market. Well, that ultimately pushed SPY higher, not before a little bounce, however. And then on Wednesday, we had lower than forecast new home sales that moved SPY up. Okay, the reason is because when there's lower new home sales, there's also less in purchases of appliances and furniture and mortgage fees and real estate commissions. Also, it's anti-inflationary. Okay, so whenever anti-inflationary news hits the market, that's good news for the stock market because that tells you that interest rates are likely going to come down sooner rather than later. If there's inflationary news on the market, that means the Feds are going to want to hold interest rates a little on the elevated side until they get convinced that it's time to reduce interest rates because inflation is getting under control. They are pretty bent on getting inflation down to that 2% target. Personally, I'm not really sure they're even going to reduce it this year. We hit the first half of the year. There's talk about reducing it in March and June and everything else, but I don't really see any talk right now, although there's some people thinking that in July it's gonna drop. I somehow doubt that. But anyway, Thursday, excuse me, Thursday we had some gross domestic product numbers, GDP numbers, pending home sales and unemployment claims all netted out to close slightly higher than open. Some of those news items were conflicting with each other. Some were inflationary, some were anti-inflationary, I guess, or deflationary, however you want to call that. And as it turned out, the net result was slightly higher than the opening price, but not before a pretty good bounce between that 547 and about 544, 60, 70 range in there. So there's a pretty good range in there. Now on Friday, we had the personal consumption expenditure report. Now this is the Fed's primary inflationary indicator. This is the gauge they really, really use, among other indicators as well. But the market was really looking at this personal consumption expenditure, PCE, and also the Chicago PMI report. Well, that initially shot SPY up because those numbers came in better than expected. So that was actually very, very good as far as inflation reads are concerned. However, we did top off at 550. A lot of automated orders kicked in, shot SPY back down about 548 and a half. And the market continued the sell-off right into the opening bell here. Technicals collapsed at about 5 points in the afternoon, just came crashing down. All right, so anybody who made money on that, congratulations. That's really awesome. All right, so looking at the seasonal chart, for those not familiar with this, that blue line at the top, that's where SPY is now, okay? And that red line at the bottom, that is the composite of the last 5 years closing price on the daily charts, okay, the daily charts. So you can see that the trends here on SPY as it proceeds through the year. But if we drill down into this, focus more on what's going on here, you'll see that historically SPY pretty well stayed the same over the last week. Again, that's going back about 5 years. Excuse me, we'll have a sip of water here. Now, seasonally, SPY actually rose about 6 points for the week coming up. Rose for the week coming up. So we're hanging around that holiday weekend kind of a thing, even though it's not a weekend this year, but it's going to be Thursday. But historically, SPY went up this particular week. So what happened? Stocks this last week, stocks posted a very strong first half on positive economic data and on the ongoing Fed rate cut prospects. The market is still very optimistic that the Feds are going to cut their rates. That strong first half performance historically produced above average full year returns. And the sector that produced the best was technology, by far, led by artificial intelligence. And there's a lot of optimism in the second half with lots of fundamental support as well. And this is all fueled and is fueling the Feds letting their foot off the brake, and corporate profits also poised to rise further. So if we continue in the second half as we have in the first, I think we're going to continue to see some movement to the upside, although maybe not quite as much as we have seen in the first half. So the first half of 2024 is right up there. We've got about, I would say about a 15%, roughly 14.5% actually, rise in SPY. All right, so it's been a pretty good year so far for the stock. You can see how 22 just dropped. That's with the whole COVID thing, and last year went up, and this year's pretty strong. So we'll see what happens. This is what the week looked like last week with the S&P 500. We actually dropped about a 0.1%. We're still showing here just under a 15% year to date. The NASDAQ is over 18% year to date, and the Dow is just kind of trailing along at just under 4% year to date. Those are the results here for the last week. All right, what's coming up in the week ahead? Well, on Monday, excuse me, we've got the S&P Global Final Manufacturing PMI and also the Institute for Supply Management Manufacturing PMI reports. It's going to be pretty good. On Tuesday, Fed Chair Powell speaks. I believe he's in Portugal. He's on some panel or something. May not have all that much of an effect, but we'll see what he says. His words do resonate with the market. Also, with JOLTS job openings, that's probably going to have a greater effect than Powell's speech, but we're going to keep those both up there. Wednesday is going to be a pretty busy day in the news. It's going to be, we got the ADP, non-farm employment change, and unemployment claims, ISM, Institute for Supply Management Services PMI report, also S&P Global Final Services PMI report, and we've got the Fed's meeting minutes going to be released on Wednesday as well. Thursday, the markets are closed. Happy 4th of July, folks. And going to be pretty exciting Thursday there. And on Friday, Bureau of Labor Statistics, non-farm employment change, the unemployment rate, and average hourly earnings. That is all going to have an effect on the market. You're saying, Hugh, what effect is that going to have? Well, volatility could be moderate on Monday and Tuesday, high on Wednesday, and of course, Thursday, the market's closed, and moderate on Friday. And so my suggestion there, just take modest gains. You'll probably want to be in cash by Wednesday afternoon. I don't think you'll probably want to be holding overnight Wednesday because Thursday is a holiday. And of course, you're going to have some data loss, right? Data loss. One thing about options is they have this time value, this time component. And if you are owning the option, if you're holding options, you're going to lose time value. If you are selling options, you actually gain on time value. So, but that's kind of the way we see the volatility shaping up for the coming week. All right, folks, we give you many opportunities, not we, SPY gives you many opportunities to trade. We just show you how to spot them and how to trade them. So I mentioned that, of course, the online workshop there this last Wednesday. Now, if you're unable to get in on that, don't miss the opportunity now. And I know it was $100. It was $199. Now it's $249. believe you me, it is a steal at 249. I was never happy with that price. I'm going to be honest with you. I'm going to be forth. I'm going to frank with you. I was never happy. I always said to the guys, "Hey, listen, seriously, okay, for the price of a dinner here, a nice dinner out, you're going to give them this unbelievable information that they could take to the bank right away. This value is much, much, much greater than $249, but they kept coming back to, well, it's the volume they're looking for, volume. And I said, okay, fine, if whatever. But anyway, I said, fine. Well, whatever. I mean, it's your game now, right? This is your game. So, and that's fine. It's fine. But it's a steal. Okay, grab it, grab it. Folks, I'm not really supposed to be trading. Doctor's orders. I got high blood pressure, so to fight that, I don't check my blood pressure too much anymore. I know it's high. It's around 140 or something, 145, maybe 150. Yeah, I take pills for it. Just can't seem to get it under that. But that's kind of maybe to my normal. I don't know. Maybe I'm just high strung or something. But anyway, I sneak in some trades. These are fun trades. In other words, if the whole thing should go south on me, it's not going to change my lifestyle. Now, that said, I'm not going to tell you how many options I traded on this. Now, this was using Thinkorswim. I flip back and forth between Tasty Trade and Thinkorswim because I use their charts for Thinkorswim in the demos that I show every morning in the trading room. I figure I should probably give them some commission as well. So this on Friday, I used Tasty. These were all real trades, real money. And again, I cut out the number of options that I traded, but I can tell you there was a lot. So here's what I did here. I did actually several trades. My first trade, I actually got it at 944. You'll see it from the bottom up here. From the bottom up, you'll see how it moves. So I actually made some money here on the first trade, 944 in, out at 950 in 6 minutes, picked up 11 cents. My next trade, there's a whole bunch of them. They all executed. The buys executed. It wasn't an all or nothing. It was in segments. That's why you see so many of these buys. They added up to the total that I wanted to get. And altogether, in about a minute and a half, since I bought these at 10:03, 10:03:53, and I sold at 10:05:36, roughly a minute and a half. I picked up 10 cents. And my next trade, I picked up 14 cents in 23 minutes. There's a typo there. I have to fix that typo. Otherwise, it's going to drive me crazy here. Bear with me. Where did it go? That's not it. Where do I get the... okay, this is where is it? Did I lose it? Okay. Show the screen. I'm trying to find my PowerPoint that... okay, it seems to be impossible to get it. I'll have to fix it later. It should 23. It should say 23 minutes, not 23 minutes. I know it's going to drive me crazy, but anyway, it's my OCD. The next trade I did there, sorry about that, was 6 cents in 13 minutes. There must be a way to fix this. Okay, if I open this up, I'm probably going to be losing, aren't I? Okay, maybe if I do it this way here. No, that's not going to work. Okay, I'm not going to worry about it. Okay, oh, there it is, right there. Okay, hang on, I got it. Yeah, I don't like typos. I'm actually a stickler for grammatical errors, and all that, and it really does annoy me when there's a typo in there. So there we go. All right, let's do this again here. Okay, so now, if I click on this, okay. Now to advance this here, if I click on this here, there we go. There you go. 14 cents gain in 23 minutes. Anyway, long story short, altogether, if this was only 10 contracts, my total gain here would have been $550. I can assure you it was not 10 contracts. It was actually a lot more. But if it was only 10 contracts, that works out to about $137,000 a year, folks. I mean, how cool is that? That's I think that's about twice twice the average family income or something. Anyway, most invested in any one trade was $3,190. And that was the first trade. So for 6 minutes, that was the first trade for 6 minutes. And it was done by just after 11 o'clock. How cool is that? And without breaking a sweat. It was actually quite an enjoyable day. All right. So, all right, moving along here. Let's see, 2-minute tutorial. Question, how do we determine when to hold a trade overnight and not sell late in the day at a loss? Okay. I can't remember who sent this in, but I actually have probably several of these questions, similar questions over the week, so I thought I'd put this one up here today. All right, so how do you determine whether to hold overnight or sell for a loss? It's actually a judgment call that you're gonna develop over time based on fundamentals, price activity, how much time you have left in the trade, and the upcoming news and events. So when I say fundamentals, I'm going back to, well, what is the news? What's happening? What are the seasonals like? What sort of happened in the losing trade? So in other words, let's say you got into some calls and then the market tanked. All right, which happens. So now you have to say, well, okay, so my call options are losing money. Do I bail out or do I hold overnight? Usually you get reversals during the day. If the stock tanked quickly, all right, it's probably going to find some level of support and bounce back up. Now, if you're still in that trade at the end of the day, maybe that bounce hasn't happened yet. All right, then I have to look and see, well, how much time do I have left? Now, on Mondays and Tuesdays, I like to buy this week's Friday's expiration. All right, I like lots of time, even though I'm looking to sell it today. I still like lots of time because that means my theta loss for that day is going to be quite small as a percentage of my buy price. Yes, it's going to cost more money for an option, but guess what? You get it all back when you sell anyway. So let's say you want to spend $3,000 on a trade. So maybe you'll buy 10 contracts instead of 30 or 40 contracts. What's the difference? Right? What's the difference? The difference is your theta loss on an option costing $3 is going to be a lot less than an option costing, say, 90 cents. If you buy, say, a same-day expiration, this question comes up a lot. If you buy a same-day expiration, yes, you can make a lot of money quickly. But that same characteristic that affords that capability is also the characteristic that is going to, quite possibly and probably and eventually over time, you will lose. So if you spend, say, 10 contracts at 90 cents, you just spend $900 on an option that's costing, that's going to expire today, and then the stock turns on you. Getting that premium back is very difficult. It's not always as easy as you think. The stock has to go up and has to go quite a bit. And the more into the day you go with that, the higher it has to go. They're pretty quick on sucking premium out, not too fast on putting it back in. So even though you can make some real serious coin on same-day expirations, I happen to know from experience that, you also get taken out eventually on those options. Now, if you have, say, a trailing stop that you use, in other words, let's say you're in you're in a profit of, say, 20 or 25 cents. Well, why not just put a trailing stop in so that you're guaranteed some level of profit? If you want to do that, then that's fine. But for me, I'm just at the stage where I don't like to use that. I like to get in, make some money, get out. But I like to make sure that I have plenty of time. So if I buy, say, 10 contracts at $3,000, I'll get that money back when I sell anyway. And the theta loss might be 5% rather than 100%, which is kind of nice. So you want to make sure you have time left. So Mondays and Tuesdays, I like to buy the same week Friday's expiration. On Wednesdays, Thursdays, and Fridays, I like to buy the following week Friday's expiration. Okay, I think that's really important. that's really saved my behind a lot. Okay, saved my behind a lot. The other thing is, what are the upcoming news and events? Now, earlier this week, right? We knew that the personal consumption expenditure (PCE) report was coming out on Friday. So you might want to anticipate what that could be. If that number was lower than expected, or if it was low, then it's quite possible the stock is going to go up. If it's going to be a high number, then the market's probably going to tank. There's also, of course, the expectation. Well, what are they going to do the last day of the half year here, the 6 month into the year? Now we're starting on Monday. We're starting the second half of 2024. How is this going to fare? How are they going to do? What's going to happen? How are we going to trade? So if you anticipate the market going a certain direction, you want to maybe hold on for that reason. I like to tell people, make sure you day trade a lot. Sorry, you paper trade a lot first while as you get into these strategies, and just get a real good feel for what happens on the market. Okay. I generally don't like to use stop losses. Although I think it was a week or two ago, I did take a hit on some calls. I think it was actually Monday. I bailed out on some puts, which in hindsight, had I stayed in them, I would have done very well with them. But I just didn't like to look at these things anymore. I think it was Tuesday, maybe Tuesday or even Wednesday, that I bailed out on it. I think it was in for $3 or something. And I sold for 55 cents or something. Anyway, I had like an 89% loss. The good thing is there were only 10 contracts. It wasn't much money. But in hindsight, folks, my most of my challenges, if you want to call it that, came at on puts. So if I'm in puts and I don't like where it's going, I'll generally just dump them and get out of them. Okay, that's kind of what it's about. So for that reason, if it was calls, I would have stayed with it. So here's a look at what happened here on what day is this? This would have been what day, whatever this day was. This day was, I believe, Friday. Yeah, this would have been Friday. What I'm showing you here is the way the market went Friday. So I got into the calls based on the. Can you guys see my arrow? Okay, on the screen, can you see my cursor? Just bunch up in the questions about it. I can see it here, but I don't know if you can see it on my cursor at all when I move my cursor around the chart. Just tell me yes, you can see it, or no, you can't. And then I'll know that. Okay, good. So when the market opened here, and at 9:44, when I saw it breaking resistance, I saw nice long tails. This is a 5-minute chart, by the way. I saw a nice long tail here, so I saw this is going to go up. It should go up enough to give me a little bit of a scalp, right? Just a few cents. So I got in right there at 9:44, and then I wrote it up, and I was out of that thing in a few minutes. What is that? About 6 minutes. And I picked up a nice cool 11 cents. 11 cents right away. And then I got back into calls at 10:03. At 10:03. Okay, so where did my thing go here? Did I lose my here it is. Okay. Did I lose my slideshow? Okay, so at 10:03, all right, 10:03, nice long candle up, and that's when I got filled. Actually, I remember that. The bid ask was something like 290, 292, 293. And I saw it going up. So what I did was I actually put in my order to buy it for 2 or 3 cents more than what the ask price was. I know it sounds counterintuitive. You want to buy for less, don't you? But in this auction, I wanted to bid it up. And actually, I remember that because I was joking with the people in the trading room that, oh, I'm so happy. Sarcastically, right? I paid the high of the day. Somebody says, congratulations. I think they might have been serious. But I paid $2.95 for it, and I got filled all those orders. But that's okay because the market kept going up. So I got at 10:03, 53, almost 10:04. About a minute and a half, I sold them all for 3:05. So I picked up a dime, and I had a sell order right away. I couldn't change my sell order fast enough to get a little more money. It did go a little bit higher, but you know what? Picking up a dime on all those calls that I bought, I was pretty happy with that. I was actually pretty happy with that. And then I started, I saw we topped out there at 550.28. And then I saw this resistance, and I knew 550 was a strong resistance. And at that point, I believe Aaron kicked in and his prediction of a reversal. And that's when I started saying, okay, you know what? I believe it's going to come down. And then right around, I think it was 10:18. Here it is at 10:18. Sorry, 10:05. 10:05 as the was it the 10:05? 10:05. No, 10:18 is when I changed over to puts. 10:18. That's right. On the strength of this red candle here. At 10:18, I jumped into puts. I waited a little bit longer. Okay, it was about 23 minutes later, and I finally filled as it was breaking off of this resistance level here, right around 549, probably 549.90-ish. As it was breaking down off of that, I got out of those puts for a 14-cent gain. All right, there were a lot of contracts in that one. I continued to the downside on two more trades and at 10:42 as it continued to drop. And again at 11 o'clock for 11 o'clock for another 1 minute. Is that a 1 minute trade? Yeah, basically 1 minute trade for another 14 cents. All in all, it was a very good day for me. And that's really what it was all about. Okay. There's the move up, there's the move down. And so there's a question on the board about getting in. What's the earliest you should get in? Well, I like to get in as early as possible. As soon as the market opens, if it's going in my direction, so I will do my homework, say from between 8:30 and 9 o'clock, 9:30. I check all those indicators and everything that I do. If it's going in my direction, I got the direction established, the market opens, I want to get in on that. I understand some people sort of mock it and say, well, that's amateur hour, Hugh, that's amateur hour. And I say to them, let me get this thing on here. There we go. They say, well, that's amateur hour, as if that's a bad thing. Well, I got news for you. I actually make a lot of money during that amateur hour. Okay, I actually make a lot of money during that amateur hour. And what happens here is what I'm trying to do here is minimize this thing here. Still trying to work on this. Okay, here we go. Yeah, so I try to what happened here? Sorry, I'm just still okay. Here we go. Gotcha there. Okay. So what I'm trying to do here is okay, get in there. Okay, that's what I wanted. It's tough working off a laptop and two monitors on a laptop, so you have to bear with me while I move this around, try to get things around here. Okay. Anyway, I'd like to get in early, and just because it's amateur hour, that's where I make most of my money, because I find most of the market moves during that first hour of the day. Get in, get out, make your money, get in, get out, and get on with the rest of the day. And since I started doing that and establishing that, trying to get into my trades in the afternoon wasn't really working out well for me, because I didn't want to get in a situation where I'm holding overnight at the end of the day. And I got to make a decision. Like somebody wrote in here saying, well, what do I do about holding overnight? I think that's pretty precarious position to be in. What happens is if you hold overnight and if the stock goes against you, obviously you don't want that. And if the stock goes in your favor, you got lucky. But that getting lucky may have reinforced that in your mind and your psyche that you did something good and you'll be more apt to do it again. And that's not what you want to do. What you want to do is be in cash at the end of the day. As a day trader, I like to be in cash at the end of the day so I can sleep well, not worry about, not be stressed out. I don't want thousands of dollars out there floating, literally floating in the air at the mercy of whatever the market will hold the next morning. That's not a lot of fun. I've been there, done that. I think many of you have too. So anyway, that's kind of where I am with that, and that's how you do it. So yes, you make a lot of money in the early part of the day. All right, folks, I'm going to tell you about some of the programs that we have we've got some solid goal, learn and earn actionable plans that you can use right away. So our program is designed so you're not spending a lot of time learning and learning and learning. Yes, there's a learning curve, but we like to get you on track as quickly as possible. So we trade what we teach, we trade what we trade what we teach, and we teach what we trade. We don't give you all the fluff around it. If you want all that, yeah, we can give you that too. But I think most of you probably want to just know how to make money, right? If you're really interested in the history of this or the history of that, or all the other peripheral stuff, we can get into that one night. Maybe we'll have a Sunday night session on all that kind of stuff. But I personally think you probably want to learn how to trade right away. Okay, so we had some programs. First, I'm going to tell you about the inner circle. All right, tell you about the inner circle. This is actually the first program that we had instituted back in 2010. When people started seeing that I was making a lot of money, they started asking me questions. Well, Hugh, can you just show me something? Can you just put it online as to what you're looking to trade every morning? I was never going to do that, but I thought it'd be nice to do that. Okay, sure. They started throwing money at me, and that's what became the inner circle. And members would get this information at about 9 o'clock in the morning. I send out my report, very, very succinct, very brief report as to the way I see the market unfolding for the rest of the day. Is it going to go up or is it going to go down? Maybe even give them a reason as to why. Okay. And then later in the day, you get a follow-up report. And this tells you exactly what we did during the day. In fact, I even include the trading room results in that as well as the DayTradeSPY signal. So we give you a follow-up report. So you can look at the morning report compared to what you have, or you can just rely on us to do the heavy lifting so you don't have to. Because if you don't know what you're looking for, right, you could be sitting there for hours trying to find out, what am I supposed to do? What am I supposed to look for? How am I supposed to interpret this or interpret that? Instead, get our morning market report, our morning market analysis, follow along. Okay, if we say the markets, I'm interested in calls, okay, you go with calls, right? Also, Wednesday night, this used to be Tuesday nights. Now we changed it to Wednesday, just give you a little more room between Sunday and Wednesday. Instead of Sunday to Tuesday, there's only a couple days in there, but with Wednesday, we're kind of the hump day, right in the middle of the week. We get into our Wednesday night interactive meetup at 8 o'clock Eastern time. If you can't make it, no problem. It is recorded. You can send in your questions. We'll address your questions, and you get the recording right after it is done. Okay, so now I'm going to get into the cost in just a little bit here, so hang on there, Henry. That's the inner circle. Number 2 up is the DayTradeSPY signal. DayTradeSPY signal, and this is actually 3 to 5 signals that you're going to get. This is based on an algorithm. It is sent to your email and cell phone, actually, as a text message. The key here is to buy immediately. Within the first couple of minutes, you buy right away and sell it for a 5% gain. If it's not sold by 4 o'clock in the afternoon, just sell it at market close or whatever the market gives you. This has been working incredibly well. I think we only had one loser. When I say loser, that didn't get the 5% gain, so you would have sold it at market close. I think we had one this last month. I can't remember what it was before, but it's been working extremely well. And if you're in a trading room, you'll also learn how to make a lot more than the 5%. But this is just a nice sort of an easy trade if you're, say, working somewhere else and you can't watch the charts all day. You get this text on your cell phone right away, get on your computer, make the purchase, immediately put up a sell order for 5%, walk away and come back, and the money's in your account. It's just working really, really well like that. So, and then next up, we have the pick of the day. This is a daily pick that is determined by Aaron. Mostly, sometimes I'll kick in and give my suggestions there. And this here is determined pre-market. You're going to get the email on this just after 9 o'clock as well. So here you're going to want to buy immediately on open, making sure that 1 minute candle is going in your direction. In other words, it is a specific option that we are telling you that we're interested in buying. I'm not licensed to tell you what to do, so you have to bear with me when I say that I am interested in buying it. Uh, wink, 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 right? Uh, oh, maybe that's crossing the line. I don't know, but so you would buy this at market open if it's going your direction. In other words, if it's a call option and the market opens, check your 1 minute candle. If the pressure is to the upside, buy right away. You don't have to wait for the candle to close, nothing like that. If you see the pressure to the upside, buy right away. And immediately after you got it, immediately put it up for sale for, say, a 6%, good till cancel gain. Walk away and come back later and collect your profits. Now, we've been telling people that, especially for the new people who insist on a stop loss, then just put a 40% stop loss in on this, and sometimes you might get taken out, sometimes not. Usually you'll get your profit. Now, once in a while you may have to hold overnight, and that's fine too. I know there's well, I think one time this last week where 40% stop would have taken you out, but if you held on to the next day, you'd have actually done very, very well. Personally, I don't like stops, but I know that we have to have some kind of a stop or some kind of a close to the trade is what it is. So that's why we've been saying that. Okay. So anyway, that's really what that's about. All right. The difference. What's the difference between the pick of the day and the day trade spy signal? They're both similar, but the signal goes onto your cell phone, and it could be at any time during the day. Although most of the time it is in the mornings. All right. And you have to watch it again. That's a sell. That's a 5% sell order, and you're going to sell that by 4 o'clock. With the pick, you're not going to do that. You're going to have a. You could hold it overnight and have a 40% stop on that one, and you buy the pick right at the market open. That's kind of the reasoning in there. Okay, that's the point there. And they're both very similar. They're both extremely successful, very, very successful. Our pride and joy that we do every day, the trading room. This is where Aaron and I get together. We've been trading a long time. Combined, we have over 40 years of market experience, folks. 40 years of market experience. I think, if I may blow my own horn, I think we know what we're doing. If not, we've just been lucky for a very, very long time because we're both making very good livings off the stock market. And if you hang around with us, you probably will too. Okay. So I think that's really kind of important. And that's kind of what we're doing there. These are interactive sessions. So you'll be able to interact with us during these live market hours. We're on every morning, 9:20 to 10:30. We don't monopolize your whole day. I've been in trading rooms in the past. And by the way, watch your newsletter, your e-newsletter Thursday morning, because we're actually going to be talking about what is the difference between our trading room and any other trading room out there. You'll quickly see that, well, we have taken all the good things from all the other trading rooms, left all the bad things. We've compiled it, compressed it, and everything else. And we give you the very best things in our trading room. These are events. Our trading rooms are not drop-in centers, or they are not watch you and Aaron trade sessions. They are not, whoever happens to be in front of the microphone has control of the trading room, and who can that be the most charismatic person? And let's say, Tony's a nice guy, everybody loves Tony, and Tony says sell, and everybody sells their holdings and loses thousands of dollars. Yet had they waited 10 minutes, the market would have gone back up. It's not like that at all. All right, Aaron and I, we don't moderate the room, we host the room. All right, and with your questions, we will answer the questions and whatnot. And it's a learn and earn experience. You can watch us trade, you can trade, and we teach you all of this stuff. So you'll be able to take this and run with it yourself. Okay, whether you're a newbie or an old, past seasoned trader, you've been trading this for a long time. I'm quite confident you're going to get some real good value out of the trading room. This is where our strategies come alive. All right, their strategies come totally alive in this room. We have the OMG out of the morning gate strategy, our scalping strategy, our bread and butter strategy. It's all there. It's all there. All right. All right. So I want to tell you the price of all these. Now, a couple things about this. We have to quote you our listed price, and you'll find all of that posted on our website, DayTradeSPY.com. However, I want to see if I can do something here. Bear with me because I want to change something here. If I duplicate the screen here and bring it down, bear with me for half a second while I bring it down here. Okay, there we go. All right, this should work. There we go. If see, I'm composing the PowerPoint, changing the PowerPoint as I go along here. So, by the way, next week we're going to be back to normal. I'm going to be back in my regular office, and things will be back to normal. And you'll find the beach setting, not the fireside. Anyway, what I was going to tell you was that contact customer service at DayTradeSPY and tell them, say, look, I am interested in the following programs: trading room, signal, pick of the day, inner circle, whatever. Tell them any or all of them. What's the best price you can give me? Okay. And they'll come back to you with a special price. Okay. They'll give you a special price. And a special price it is too. So, but they can't post that on the website. They have to give you kind of like a list price on the website. But if you're interested, please, customer service at daytradespy.com. Email them, and they'll get back to you with a very special price. All right, I see it is 9 o'clock. I'm going to jump into some questions now, and I'm not going to go over your particular trades. That's not the objective here. All right, just let me scroll up here and try and get some of these questions here. Okay, how long should I wait before I enter the trade when the market opens? Bentley, as I mentioned earlier, I like to get in as soon as I can. I like to make my trades first thing in the morning here. There's a question here from Kevin. I put on a trade on Friday. First, it went against me. Then after lunch, it came back. My question: do you stay in the trade or do you get out? I think I showed you that trade, Kevin, and yes, I got out for nice profit, and I might have gone back in after that one too. I'm not really sure. Anyway, thanks for that, Tim B. Thank you for posting this. I just subscribed to Pick of the Day. Waiting for the welcome email. I might get in there tomorrow morning or something. I know they don't work this time of the night. I think I'm the only one that works this time of the night. Because I don't consider this work. To me, this is a fireside chat, kind of like you guys are coming into my living room or my condo or wherever we are. And you know what? And if I was driving on the interstate right now, driving home, guess what I'd be doing? This is what I'd be doing. I'd be right here on Zoom with you on my cell phone. Now you might not see a PowerPoint. Would you guys object to that, by the way? If we ever have a situation like that where I'm not in a in front of, I don't have a PowerPoint for, I just sit here and talk, just see me as we talk and get the questions. So if you have any objections to that, let me know. Because I don't want to put you out. But anyway, okay, good to see all of that. Hello from Denver, Colorado. Good evening from Fort Lauderdale. Jackson, yeah, that's where we were yesterday. Hello, okay. Sound is good. Okay. Shows how you would repair pick of the day. That did not work last week. Pick was on the puts. We'll have to do that in the trading room, Richard. We'll be looking at that probably tomorrow if there's something there that I think our picks pretty well worked though, didn't they? There might have been, I think there was one that the 40% stop loss took us out. So legally, I'm supposed to show you that stop, but in practicality, I would not have, and I think you even mentioned this in the follow-up report, I would not have left that trade. I would have stayed in and would have made like a bandit, made out like a bandit on that one here. Okay, Bob, the math guy still don't have the bread and butter seminar. Can you please email if you have not yet? Okay, so if you have taken the bread and butter webinar, seminar, workshop last week, and you do not have the recording, please contact customer service at DayTradeSPY and tell them. If you do not get a response, say in a couple hours after that, let me know, and I too will shake the chains on that one. Okay, you should actually have that. I'm guessing you should. So, who I should email? Customer service at DayTradeSPY. Gregory Z, you are new. Welcome. Welcome. All right. Okay. Do you expect last week's debate, you mean the clown show, Mike, that impacts SPY prices this week? No. No, no, it's a function of interest rates, which is a function of inflation. The news that actually affects the stock market is any news related to inflation vis-a-vis interest rates. Um, how many of you guys saw the debate on, was it Thursday night? Thursday night. It was, I was almost embarrassed uh, to watch them, you know, and it was funny. It was almost embarrassing. I couldn't believe it. Well, what do you want to get into that one? So, okay. Thanks for that, Kevin. Going to start along with you. Okay, thanks. He's been watching. He's been in our trading for a couple weeks. Good to have you here. Uh, Mark is asking, do you have a document that provides setup instructions for Thinkorswim? I can't figure out how to set it up. I tend to bread and butter, but not able to get it right. Mark J, are you in our trading room? If not, please join us. I think we're going to have some segments on in the trading room as to how to set up Thinkorswim. I've had a few people ask that, and I think that is worthy of spending a little time in setting up Thinkorswim. So please, Mark, join us in the trading room. All right, and that's we'll conduct that thing that exercise in there. Now, if we somehow forget to do that, like usually around 10, 10, 15, 10, 20, there's a bit of a lull in the action. We might do it in there. In case, Mark, I don't get into that, I forget about it, please remind me in the questions box in the trading room to do that. I do want to do that and help you set up Thinkorswim on that one. So, okay. Scott's asking what happens this week's 90% win rate. 2 rough days would have stopped at a 40% more cost of but still. This week, Scott, was a little rough. Aaron and I did discuss it. That should be cleaned up a little bit more. We had some challenges this week. And like I say, I'm not into the stops, but unfortunately, and it did, by the way, go in our direction. It's just that it would have hit the stop first. So that was something, and we're discussing that because in instituting the 40% stop loss on that, we have to make some other changes. And instead of looking at that longer vision out, let's see what the tighter future looks like. Never mind what's longer out to the end of the day. What's it look like between now and noon? And that's what we have to determine. So, Phil L, love you. Absolutely. Thank you. We love you too, Phil. Okay. Okay. Tim B, anyway, you can walk us through an example, workflow of how you place a trade on Tasty, given how quickly it all moves, how you set up in a trade, pre-market, how do you decide the limit price? Again, Tim, we're going to be doing that in the trading room. All right, that's really where we do that. These sessions here, Sunday nights, are more sort of a general, high-level kind of a, kind of a thing. It's not really a training program. It's a combination of where we saw the market, what happened last week, where we see it coming up this week from a sort of a macro market sentiment point of view, what to look for with news items and all of that. And yes, a little marketing in there to kind of promote some of the things that we do. Because I think we have something for everybody. I know that it's hard to tell that because I know everybody's got different sort of goals and aspirations and what they want from trading. But we have, I think we have a little something for everybody. If it's money you want to make, okay. If you want to make money, you're in the right place. If you want to know all about the stock market, I'm sure there are many places you can go and learn all about the stock market. Frankly, it'd be like going into a university that you will never graduate from, a college you'll never get a diploma in because it's always changing. The dynamics of the stock market are always changing. And as I mentioned in, I think it was a recent newsletter, one size does not fit all. Maybe I wrote that. It won't be released until the next time. I can't remember. I remember recently I talked about that. Trading and strategies is not a one size fits all. Everybody's going to have different risk tolerances, different capitalizations, different understanding of our strategies, different understanding of the stock market. I can show you a chart and ask you, is the market going up or is it going down? And you might say to me, well, at this particular moment, this candlestick is going up. But if I go back 5 minutes, it's trending down. If I go back 30 minutes, it's trending up. So what time frame are you referring to? And at this specific moment, so there's a lot of variables. That's what I'm trying to say. Different understanding of the market, different understanding of our programs, how our programs work. Capitalization is going to matter, right? If you are not very heavily funded, you're going to have those pressures working on you that this trade has to work or else I'm going to lose my mortgage money or my rent or kids don't eat today, so those are real pressures on the market. Your understanding of money management techniques, all of stuff that we teach, all of this is going to have an effect on your success. So, and just how much risk can you tolerate? I perhaps can tolerate more risk than maybe other people can because I've been around it long enough. I've got a good feel that, okay, well, yeah, it's going down right now. And by the way, not all my trades work out like immediately. That one trade, I believe that I was under, I hadn't sold for 23 minutes, that last trade. Yeah, guess what? The market went against me for a while, maybe even 10, 15 cents, maybe even 20, 25 cents. I don't remember. But I stuck with it. Why did I stay with that trade? That was a put trade. And I don't want to go back to that, but maybe I should. I don't know. Let me just go see if I can actually swing back to that trade to show you this one right here. Okay, if I show this slide here. Okay, why doesn't it want to go back? Oh my gosh. Okay, upload block. I don't know. Let me go back. Let me just go back and show you. There we go. We're gonna find it. We're gonna find it. This one here. Okay. There we go. Okay, so this last trade, folks. I was in that trade for I think 23 minutes. Not the last, the second last one here. I got in at 10:42. Out at 10:50. No, that was at 10:18. Which one was that 23-minute one? Hang on a second. Where was that? Here we go. Oh, I guess there was no 23. There's 23 minutes. Okay, the second last one here, right? That would have been this one, 10:42 to 10:55. Oh, you know what? No, 10:18. This is it. 10:18 to 10:41. 10:18. These were puts. These were puts. 10:18 to 10:41. 10:18 to 10:41. Okay, what happened? 10:18 to 10:41. Well, at 10:18 on puts, the market was pushing to the upside here, right? We found some support after a big red candle. It's not unusual to see a reversal, but I knew there was some strong resistance at 550, and I was waiting and waiting. Okay, let the market go through its emotions. I knew, I shouldn't say knew, I don't know anything. I suspected strongly that 550 resistance was going to hold. And over time, those indicators that I use are going to suggest it's going to come down. And lo and behold, on this red candle and the following red candle, we kind of collapsed. We popped up a little bit right here, the green candle, and then this other red candle, down we went. My regret, if any, was that I didn't hold on long enough because there would have been another dollar I could have made from here at what about 9:45, 11 o'clock, all the way down to the end of the day, all the way down to the end of the day. And okay, it looks like I just lost my PowerPoint. Did I lose my PowerPoint? Where did I go? Okay, I got to get my PowerPoint back. Something's kind of goofing off here. These guys, they don't want to stay up on my board here. All right, let me get back into this. Okay, so that's kind of where slideshow. There we go. There we go. Okay. All right. Let's get back some more questions here before we wrap it up here. All right. Okay. Okay, Matthew, nice to see you here. Live right by Stetson. You're still in Orlando. We got a busy day. Matthew, thank you. Mentioned it'd been great to get together, but we got actually a real busy day here on on Monday and Tuesday. I think we're actually heading back on Tuesday. I think my wife booked a flight back. We got a lot of stuff going on here at home. We got to get back. We want to beat the July 4th rush. So you got that, U of F. Okay, well, it's not quite that. It's we're talking about FIU, FAU, and Florida University would anyway. Lynn, visit Steve. Thanks for that. Visit Lynn and Boca. Yeah, we're gonna probably end up coming back and running some more of those school tours. So, all right, David C, you're new to the group. Welcome, David. Not new to options. I've done more cover calls and my dividend stocks and wheel strategies. Pick of the day intrigued me. It made sense. You're talking about the stops on the pick of the day trading. Your sheet says 40%. Can you elaborate? Okay, and again, okay, so as far as these stops, we recently implemented this 40% stop. The bosses said you have to have some kind of an end to these trades. You can't leave it open-ended because some people are following you, even though you tell them you're all on your own and your trading is going to be different from everybody else's and all that other stuff. And you teach them things, you should still have some sort of if you're going to beginning, you have to have an end. So, okay, we're going to put a stop, 40% stop. It's rare that's going to hit that. But let's put that in. So for that reason, I like to have that. But personally, I don't use stops. I manage my positions in different ways than other than stops. I find they don't really work well for a SPY, especially if it's a tight stop, because it'll hit it all too often. And being human like we are, you ever do this? You sell for a loss. Yeah, you continue to watch you keep watching the stock as if the option as if it's still yours, even though you sold it. And then you're watching and you say, oh my gosh, if I stick around for another 15, 20 minutes, it would have come back in my direction. That ever happened to you? That's getting burned twice, financially and then emotionally. Why do we do that? Why do we go back for more? Right? As soon as you sell it, get it out of your mind, get it off the board, get it off your whatever. Okay, it's no longer yours. Right? Let's say I take the subway, or I take a train. I take a train. I'm picking up my train. I want to go from Buffalo to Chicago. The train goes from it actually originates in New York, goes to LA. It makes a stop in Buffalo. I get on, I get off in Chicago. I wave the train goodbye. I really don't give a rat's behind if it falls off the track 100 feet up, right? Not my train anymore, right? And for that reason, that's how you should treat options as well. Once they're off your board, off your plate, they're sold, they're gone, 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 right? So anyway, okay, Rex, you're new to day trade, doing paper trading. Good to hear that. Yes, doing quite well except for Wednesday. Okay, got close to briefly with no Phil. Just reading some of these comments here. Okay, yeah, there's gonna be some losses. Okay, so is there anything that handle differently? Again, I'm a newbie. Okay, Rex. So if you're not new to if you know what calls and puts are, you belong in the trading room. And I believe that if you call or contact customer support, the trading room is something like $6.99 for 3 months, which is an unbelievable steal. Grab it. In the trading room, we teach you all this stuff, all those intricate nuances, all that stuff. That's where you're going to learn all this stuff, and you're going to get good at it. I really, if nothing else, I want you guys and gals to log your trades. All right, log your trades. And this is all stuff you learned in the webinar that we had the other night as well, and the bread and butter. Log your trades, and there's a column in my spreadsheet that I have. You should have one too. And if you take the course, you'll get the spreadsheet. There's a column that says notes. Log any concerns you had with the trade, any challenges. You get in too early, you stayed too late, you missed the mark, you this, whatever. And learn from your mistakes. Do a series of maybe 20, 30, 40, 50 paper trades. When you're comfortable, then transition to real money, starting slowly with one real trade, a little bit of money, maybe 1,000, 1,500. Go back to another 4 or 5 paper trades, then another real, another 4 or 5 paper trades, another real. Flip back and forth until you're very, very comfortable with real money. You're making some money, and then when you get that profitable format done, then trade more, right? Build it up slowly and just continue doing what works. Do less of what doesn't work and more of what works, and you'll end up making some real serious money. All right, Reggie, thank you very much. Traded last week, all 5 days. Overall good, 21 trades of 6% or more profit on each trade. Congratulations there. I'd give you a bell, Reg, but I don't have my bell here. So, okay, this is recorded and will be accessible on the website. I think it's up in the top left corner. There should be a link to these sessions here, folks. What happened to the after 11 o'clocks Friday? I don't. I'm not going to go into the individual things. Probably a big sell-off because some major fund or something started selling and attracted other sell-offs. Okay. Did you ever buy Best Choice? I don't believe they are around anymore. My good friends at Best Choice, Sonny Decker passed away several years ago. They had sold a business. I don't think it's around anymore. I don't use it anymore. Charles, you go back a long way, man. I think we go back together. I don't know. Mike G, love the 6% strategy on pick of the day. Okay. How can we best grow our trading balance again? Get into the trading room. We'll get you out of the slump. All right. I'm just seeing it's 9:20. I don't want to keep. I'm going to see if I can scroll down real quick here for some more. Mark J said, great bread and butter workshop. Thank you. Okay. Yes, the picks are short-lived. The idea of the pick of the day and the day trades by signal, they are meant to be short trades. Oftentimes 2 or 3 minutes, 4 minutes. The idea is to get in, make your money, get out. Done for the day. All right, that's the idea. You're not into make a long trade on that one. That's not the objective, is to stay in this a long time. You want to get in and get out quickly as quickly as possible. Okay. Okay, thanks for that, Bob, the math guy. You did search your email and found. So if you did not get the bread and butter workshop that you did attend, but you didn't get the recording, dig through your email, go through any junk, spam, or other promotional boxes or whatever, and you should have it there. Okay. And if not, then again, contact customer service, and it should be there. Okay, a lot of great questions. Tom, Jay, thank you very much for your questions on that here. Yeah, and you know what? Even he asked the question. Tom's one that asked the question about holding overnight. Sometimes even having a small loss is better than having a big loss. So I would rather get out with a small loss at the end of the day than to hold overnight where it could be questionable. All right. I believe the 1 day hold on our money is now no longer. I believe they settle the same day. And okay. Okay, there's some. Okay, scalps, yes, okay. All right. Yes, there's this day trade spy rule. Not a day trade, a day trade pattern day trade rule. If you have less than 25,000 in your account, you can only trade 3 times round trip in and out in a 5-day period. Now you don't have to have 25,000 in your. I think in your, maybe you do have to have it in your trading account, but you don't have to trade it. You can have it in just held there in cash. And if you're going to have some cash, you might as well have it in your account so you can trade in and out as much as you want if you have over 25,000. If you have less than that, set up a cash account. That way you are not affected by the pattern day trade rule. You can trade as much as you want as long as you have the cash. Let's say you have $10,000 cash in your account. You can trade 4, 5, 10 times a day as long as you have the cash to cover it. Okay, so that's pretty good. All right. Okay, do you advise waiting 10, 15 minutes after the market opens to enter the pick of the day? The pick of the day is designed to be purchased right at market open. If it's going in your direction, if you see the pressure going in your direction, at the market open, get in at that time. If you see the pressure going against you at the market open, wait until it turns around and then get in. In other words, let's say the pick of the day is the call options, okay? You have the email by, say, 9:15. You know which options you're going to buy. At 9:30, the opening bell hits. Look at your option. Wait a few seconds for the bid-ask spread to settle in nice and tight within 2-3 cents of each other. If it's 5, 6, 10, 20 cents apart, don't get in yet. Wait till the price settles in, usually just a few seconds until they get in the bid-ask between 2 and 3 cents of each other. Then watch the 1-minute candle. If, like I mentioned, it's a call option, you want to see the pressure to the upside. You want to see a green candle, or you just want to see it pushing up, get in right then and there. Pick of the day is anchored in time at the opening bell. In other words, what we're saying is this, folks. Pick of the day. We're saying that you buy the option at some point, it's going to go up or down enough to give you the option, the profits on your calls or puts during that day. That's what we're saying. What we determine, we'll say the propensity with calls, the propensity is to the upside soon after the market opens. So we're going to issue you a call option. That's what we're saying. But you got to buy it at market open. Okay. All right. Okay. Anyway, it's now 9:25. What platform do I use? I like to use TD Ameritrade, not TD. I'd like to use Schwab, Thinkorswim, and also Tasty Trade. I like Tasty Trade. Okay, so they're both written by the same people. Tom Sosnoff and his group. Great guy, Tom. I've talked to him on occasion. In fact, I got him on speed dial. So what happens is I like Thinkorswim because of their superior charting, and I like Tasty because of their superior commission structure and speed. They're both very fast, but I think Tasty's probably just a shade faster. They're both very fast. They're immediate, but I like the commission structure on Tasty. By that I mean it's $1 a contract to purchase, zero to open a position, zero to close, plus a couple cents exchange fees, and up to a maximum of $10. So if I'm trading 100 contracts, Tasty would be the way to go because my maximum commission, $10. If I trade 500 contracts, I'm only paying, you got it, $10 for commission. All right, Charles G., where do I get all my bread and butter recordings? Again, contact customer service at DayTradeSPY. Okay. Okay. All right, so I think we're going to call it a night here, folks. I know there's a lot of questions here. I hope I got most of them answered for you. I apologize if I don't. I think, wow. Okay. Have a safe, wonderful holiday. Yes, folks, have a wonderful holiday weekend. Okay, and this is what we do. One stock, one strategy, 1 hour a day. Over the years, we figured out what works and what doesn't work. And that's why we're so successful with what we do in both trading and training. Ladies and gentlemen, it's been a pleasure. This is what we do. We day trade SPY options, period. Nothing else. SPY is the highest traded stock. It's affordable, diverse, liquid, huge potential, profit potential, exciting trading. And gotta love it. Okay, this is what we gotta love it. And that's why that's all we do. All SPY all the time. And it's all there. It's all there. There's nothing more I could ask for than this. This is it. When they invented this, it's like, okay, that is the most awesome thing. Thank you all, and thank you for joining us again. Have a wonderful 4th of July. We'll see you back here next Sunday night. Good night, everybody.
Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know it. heard it loud and clear.